Hello and welcome to the Homeowner Prep Podcast. I'm your host, Eric Halan, and this podcast was created to provide real-world advice and accountability for first-time homebuyers. We'll be interviewing industry experts, providing some how-tos, and talking with first-time homebuyers about their personal experiences. If that sounds interesting to you, please be sure to subscribe, and if you're watching on YouTube, be sure to hit the little bell to be notified when new episodes release. Now let's dive into today's episode. Welcome to the Homeowner Prep Podcast. I'm your host, Eric Halan, and today we got a very special guest that's going to come on and really talk to us about the home buying process for first-time home buyers and really explain step-by-step what it takes to buy a home in today's market. So we have with us Ms. Breanna Barksdale. Welcome, welcome.
Thank you for having me, Eric.
Absolutely. Happy to have you on. Yeah, Breanna's actually been helping a lot of my clients, affectionately known as Bree. So if you hear me call her Bree, that's what that is. But it just really developing a business relationship and really helping clients get into homes. And so I wanted to have her on this episode because I really want to dive into what it's going to take for anybody who's renting right now to become a first-time home buyer, and kind of what that process is going to take. But before we get into that, just tell me a little bit about you and your background.
Yeah, I am born and raised in San Diego. I was a collegiate athlete at Auburn where I played volleyball. I also graduated with my degree in marketing and it kind of kickstarted my career in marketing. But now I'm here and I'm currently working to get my master's in entrepreneurship at UCLA.
That's awesome. Amazing. That's amazing. When you got your degree in marketing, did you have like a focus that you're like, I really want to get into this or that, or did you always have like a real estate mind?
It's crazy. I actually kicked off my marketing career for a mortgage brokerage. Okay. And I was focused on promoting the CRM that we had to realtors and lenders. So it's kind of crazy how, my career came full circle. So
now you're on the other side, right?
Yeah.
So, obviously you're a licensed loan officer now. You're in how many states are you licensed in?
30.
30 states. So that's freaking amazing. And clap, clap, clap.
Thank you.
Most loan officers just get their license in one state. So that's vital. And I think it's important because as we reach out to so many people that are in different states, you can still help them out.
Yeah, so for sure. Especially our veteran community. A lot of our veterans are PCSing, moving to station. And, we get a lot of clients all around the world. So it's very important that we're servicing all of our veteran community in the best way possible. So awesome.
Well, definitely. It's good to know that, you've been in this business for a while. You've kind of been on the other side of the business and now you're here as a loan officer. As far as helping first-time home buyers, I know you help a lot of veterans who are buying their first place. Is that a special place in your heart for those types of clients? I mean, do you focus on that or?
Yes. I think it's so important as first-time home buyers to get educated for one, use your resources around you, and also knowing what homeownership can do. It can create generational wealth. You could build equity and potentially, sell your property and, have a large lump sum of cash where you can further invest. So I think first-time home buyers are like the best clients to have because they just, they're willing to have you pour into them. Right. Which is great. Right.
And I know you're a lot like I am where, you want to take your first-time home buyer and really turn them into that investor, have that investor mindset. And so, just helping them kind of get the ball rolling, get in the game. Yeah. Is important. And I had you kind of highlight on the competition and playing collegiate sports because I think that's important. I play sports. I think there's a level of competition, how you're going to fight for your clients, and how you're going to compete to make sure that they can get what they want as well. So that's vital for sure. So tell me, is there a time where maybe you had a transaction or a client that really was down and out, didn't really feel like it was going to happen? It might happen every day, but tell me a little bit about that.
Yeah, I just had one recently, and he was a first-time homebuyer, veteran client, and he is in the same line of work as his military work. He has a fiance, and his baby was just born December 5th. So, it was really crucial for him to find a house where he can call a home. And he has been shopping since forever, since July. He's up in Duarte. So it was very competitive, and it's a lot of the realtors don't understand the VA home loan. They think, oh, well, you need more skin in the game. You need more cash down. Like, why aren't you putting cash down? So he, got discouraged. And I told him, like, keep putting in offers, keep going, looking at homes, like the one will be there. And he finally found a property. And during the transaction, the underwriter was asking for a lot of conditions. She was super particular. And in a lot of scenarios, underwriters were asked for like letter of explanations, and they'll ask for school transcripts. And, as a first-time home buyer, it can be very overwhelming.
Right.
And you kind of like have to guide them through it emotionally too. And keep encouraging them like, hey, just because the underwriter is asking for this doesn't mean that the loan's not going to go through.
Right.
And, there's termite work, which was like a big deal too. But it's like the normal process. And a lot of the first time home buyers don't understand that. So it came down to literally the last day. He was like, if it doesn't close tomorrow, then I'm just not going to go through with it. Yeah. But we were able to get the termite clearance, close the next day.
That's awesome.
And he was like, thank you so much. And it's really important for first-time home buyers to know it's not going to be easy.
Right.
They think, oh, I just signed a bunch of papers and it's done.
Right.
Like, no.
You go, HGTV has them fooled,
Yes.
I go look at 3 homes, I put an offer in, I got it,
Exactly. So, but he was ecstatic in the end, and I know he will forever cherish this moment and having his, fiance and his daughter, have a home.
Right.
It's important.
For sure. I mean, yeah, it's like you're having an impact at this time in his life, but also impacting future generations to come.
Yes, for sure.
Now he's got a new baby, and so what is the wealth of that household, and if they do things the right way, they can be set up for life. So absolutely, I think that plays a major part in everything that we do. It's like it's not just about the particular client at the particular time, but how is this decision going to impact their future generations.
For sure.
So that's major. So I do want to kind of dive into, take me on this journey. I'm a first-time home buyer. I'm coming to you and I'm like, hey, I've been paying rent in San Diego forever. It's ridiculous now. It's like $4,000 a month, and I need to just get into something, walk me through that journey. And as we go through this, I do have a little buzzer. And so what we're going to play is a little game called Buzz Lingo. And Buzz Lingo is if you start to use any jargon, any terms that and I know, but maybe the listener or the viewer doesn't know, we're just going to do a slight little buzz.
Okay.
And just so it kind of, I need to kind of explain that a little bit.
Sounds
so hopefully
good.
I don't have to use it on you. Yeah. But if I do, you'll know, and then hopefully we can explain it a little bit more. But
sounds good.
Take me through this journey. Now, I'm coming just, hey, I just met you maybe out at an event, whatever the case may be. I'm letting you know, hey, I want to buy a house. What is that very first step for me?
So usually, as majority of them go, we start off with a consultation. So it's kind of like when you go first reach out to a realtor, you let them know your goals. We specifically talk about, okay, what purchase price are you looking at? Or, do you have a budget for a monthly payment in mind? And, we talk about things about, is HOA fees important to you? Do you want a single family residence? Do you want a condo? Do you have a family? Just make introductions, consult with each other, figure out their goals and their aspirations to buying a property. Okay.
And so like in that consultation now, we're talking with the young generation. Hey, I'm a millennial, right? I don't want to come to the office. Does that have to be face-to-face? Do I have to come to your office for that to take place?
No, although we love to have our consultations in person, we're really big about face-to-face communication and building relationships. It's not just a transaction for us, but we've built amazing relationships over the phone. We have a mobile application, so say we do our consultation over the phone and you're like, okay, I'm ready to move forward. I'll send you a mobile application link. You complete it out to the best of your ability. I send out an email. Okay, based on your application, these are the requested documents that we need. Okay. And then I kind of plug and chug the rest.
Okay. And so, and this is a major hurdle. We talk about, first time home buyers and not being prepared for obstacles, right? So because I know I've sent a lot of people your way, and they're like, hey, I want to buy a house. And then they talk to you, and then they kind of like, they're like, well, I don't want you to pull my credit.
Yes.
Right?
Yes.
What is the fear there? What has anybody expressed to you, like, why are they hitting the brakes at that point?
Yeah, and it's kind of torn. It's like, okay, either I want you to pull credit today or don't do it. Don't do it at all. And I'm like, okay, well, what are your concerns? And majority of the times it's like, oh, well, I have some lates, or I need to pay down this balance, or, they have preconceived notions based on like apps like Credit Karma, or, pulling a Experian or Equifax or whatever they use. And they think they have a score in mind, but we actually pull directly from the credit bureau. So sometimes the scores are totally off from what's presented to them. So I think they think it's worst case scenario, like, oh, my credit score is going to be like 540. But majority of the time, clients are completely fine.
They're good. Yeah. I think I wanted to bring that up because, we see it all the time, so it's like, that we have this, okay, I'm ready to go, and they rush up to this point, and then when you're like, okay, we're going to go ahead and pull credit, like, oh, well, wait,
Yeah.
I don't think I'm there.
And worst case scenario, say we pull it and it's lower than our credit overlays. And clients are like, oh, well, I don't know what to do. We have a credit expert software, which actually shows us, okay, if you were to pay down this balance, or if you were to remove yourself as an authorized user from this card, then your credit score could go up to this amount.
Right.
So there's many different ways we can leverage credit and, help you out. We're ultimately here as a resource to our clients to not only help them with like their financial literacy, but like set them up in the best way possible, because we don't want to just take their credit score and they're like, oh, well, I actually still wanted to work on it, even though, we're above your credit overlay. So it's very important that we keep that in mind with our clients. Sure.
Yeah, and that's one thing, explaining that, hey, worst case scenario, you're going to come out of here with a game plan.
Yes.
So, and that's why I'll often say to first-time home buyers who are worried about, pulling credit, they don't know.
Yes. And a lot of people are like, oh, no, I'm still working on it. And I'm like, okay, well, a majority of clients, when they do it on their own, they mess it up.
Yeah.
They make it worse. So
leave it alone. Leave it to the experts.
Leave it to us. We'll help you out.
Exactly. Yeah. You're going to go pay off a bunch of stuff that you didn't need to pay off. It doesn't have anything to do with it. So
for sure.
So now, okay, so if I've gone through this consultation, we're going to pull my credit. We pull the credit. Credit's good. Yeah. We have an idea. So you would, what is it that you're going to give me so I can get out and actually go find a house?
Yeah. So once your application is done, you've given me the proper documentation. I'll have to do like a review. I'll have to do like verifications of employment, verification of rent if you're renting. And I'll have to go through your income, your assets, so bank statements, your liabilities, your credit trade lines. Okay. I'll have to see like if you own another house, I'll have to look at your mortgage statements, look at like homeowners insurance, HOA statements, and things like that, property taxes. And we talk about DTI.
Right. Hold on. Let's talk about that.
Yeah.
So DTI. What is DTI?
So for conventional loans and FHA loans, mainly, we look at debt to income ratios. So we look at, okay, how much money does this client make, and how much are they paying in monthly, expenses, plus their like proposed mortgage payment. Right. So we want to make sure that our clients are not, spending their money inappropriately. Pushing it to the limit. Yeah. We like to, there's obviously guidelines, but we want to make sure like, okay, this is financially feasible for this client and it makes sense. Right. The last thing we want to do is put a client into a home and they experience payment shock. Right. So we look at debt to income ratios. For VA loans specifically, we look at residual. So residuals, how much money do you have at the end of the month after you get paid, after you paid all your monthly expenses, and then after the proposed mortgage payment? Okay. So there are certain guidelines based on like family size for VA, but mainly we look at DTI, or debt to income ratio, for FHA and conventional. Okay.
It's good to know. So, and how would it differ if, let's say, if I just worked a regular job, what documentation I provide you versus if I'm running my own company?
I see.
How's that work out?
Yeah. So there's a few different documents. I actually have like an email template, so it makes it super easy.
Got it all locked in.
Yeah. Don't tell anybody though. Right. But like for VA clients, we ask for LES. So it's super simple for VA. Like active duty. So we ask for the LES. Okay. We ask for bank statements.
Is that another acronym?
Yeah, so it's actually like basically their pay stub, and they get it every month. So we'll ask for their statement, that it's like their 30-day statement. For like anybody that's self-employed, we'll ask for 2 years of tax returns. Like say now that we're in 2022 and majority of people haven't filed 2021 taxes yet. So we'll ask for 2019, 2020, and then a profit and loss statement.
Okay, gotcha.
And self-employed can be a little bit tricky because a lot of people want to write things off, and that's fine. That's fine. Right. That's normal. You're obviously going to have certain expenses that you want to write off, but that greatly impacts how much you qualify for. For a regular employee, 9 to 5, we'll ask for 30 days of pay stubs. We'll ask for, your employer's information, HR, payroll for those verifications of employment, W-2s for the last 2 years, and things like that. So.
Okay. So getting all in the business.
Yeah.
Gotta get it all.
Yeah, gotta get it all.
Gotta make sure that I'm ready. Okay, I got you. So now that you've gone through all this stuff and I'm good, I'm golden, right? So what do I need now? Like what's the next step for me?
So the next step, once we have everything dialed in, your debt to income ratios look good or your residual looks good, we have like an automated underwriting system where we can, automatically underwrite your loan based on what we put in the application. Okay. So it's very important that we get like verified information, things that are legit.
Get it all done, on time, get it all in. Yeah.
Exactly. And then it'll say, okay, this person's approved eligible. Okay. Then I'll be like, hey, you're approved for this much. A lot of people say, hey, I want to find out my max. And then I'll send them like an estimated fee worksheet, which shows all the fees, so closing costs. It'll show like title escrow fees, any third-party fees, prepaids and reserves, so any property taxes and homeowners insurance payments. And so it kind of breaks it down that way. And sometimes we'll get like a refer eligible, which means that we'll have to send it to an underwriter for a manual underwrite. So gotcha. Especially if I see any bankruptcies, we'll get like a refer eligible. That doesn't mean that the client isn't approved. It just means that an official underwriter needs to go through the file.
Physically look at it and everything. So you're not getting, it doesn't just go through the system like, boom, you're good. Now somebody's actually got to look through all your paperwork. Gotcha.
Exactly.
Okay. And so, once I'm approved, I'm going out there now, you're going to give me that pre-approval letter saying that, hey, you go have fun, right?
Yeah.
So, hey, you're qualified for $1.5 million or whatever. So if I'm going out and let's say I find a home and in this market is very, very tough. Right
very difficult. Very difficult.
Very tough to get an offer accepted in this market. But once I do get an offer accepted, I'm working with an agent, obviously showing me homes, things of that nature. You're working with that agent as well to make sure that, everything's staying, everybody's staying in communication. But once I get approved, now I'm in escrow. Yeah. What does that escrow process look like? What am I responsible for?
Yeah. So once you're in escrow, we kind of like take over everything. So us as a lenders, we're in contact with the escrow officers or, attorneys if you're in other states. But we're specifically in contact with the escrow office, and we'll, tell them like, okay, this is a property. These are the things that we're looking for from, title and things like that. And what we request from the borrower is not to open any new credit lines. Don't buy anything crazy. Yeah.
Oh, man.
But specifically, like we'll ask for, okay, EMD. So like earnest money deposit. So we'll have to make sure if there's an EMD presented on your contract, okay, when is that due date? Okay, once you have your check written, we'll need to see a bank statement showing that EMD cleared your account.
Gotcha.
We'll have to make sure like there's no large deposits that are above your paychecks. Like we don't want a random $10,000 deposit. Don't do that.
Yeah.
If anything, just
explain that.
Yeah. We don't need to see any cash deposits
Right.
that are above like $5,000.
Yeah.
But so we'll fair warn our borrowers, okay, don't
Do's
do
and
any
don'ts. Yeah.
don't do anything that will make your underwriter suspicious.
Right.
We'll also request, like, depending on when you get pre-approved, we'll request like new updated pay stubs, bank statements. We'll ask for you to go out to an insurance agent and get a bound policy for homeowners insurance. It's very important that your home is insured for the full loan amount.
Yes.
Yes.
Sound like you're speaking from experience there.
Yes.
And there's some areas I know, like in San Diego County, where some homes are having a hard time getting insured if they're in a high fire area or things of that nature.
Yeah, and I have a lot of clients in New Mexico where their homeowners insurance is higher out there than it is here, but their loan amounts are basically half the size, but it's because of tornadoes, floods.
Gotcha.
It's pretty crazy out in New Mexico.
So I got some crazy weather patterns.
Yeah.
Yeah, you don't think about that. Yeah, I'm so like gung-ho on California, but yeah, as you get outside of California, there's different issues.
And also, once we get into escrow, we have like all the initial needs list and documentation. We'll send your loan over to approval to the underwriter officially. Then she'll come back with like approval conditions. So if she sees something that maybe, catches her eye, like, oh, why do you have this alias on your credit report? Or, why do you have this address in Texas, but you live in California? Why do you have that on your credit report? Or, any social security discrepancies, things like that. So we'll come back with approval conditions. The appraisal is obviously one of them that's always an approval condition, especially for VA. We haven't had any Tidewaters recently.
What is?
So
a Tidewater.
A Tidewater is when like your purchase price or your purchase price is higher than what the appraised value comes in at. So as lenders, we actually take the lower of the two. So if your purchase price is $550, but your appraisal came in at $545, we have to go from the lower of the two. So whether that means that you have to split the difference with the sellers, the seller lowers their purchase price, or you come up with that extra money, that's a decision that you would have to make as a borrower.
And so and again, this is important because a lot of first-time home buyers are like worried, especially right now when they're, having to pay higher prices, right? They're, in order to get their offer accepted, they're kind of throwing that money at this house, like hope is worth it, right?
Yeah.
But, as a first-time home buyer, most of these loan programs, you're getting an appraisal done. You're going to kind of protect yourself, especially VA with the Tidewater situation. So you're protected, where if things don't line up, if they don't come back at where your contract price is, there's some renegotiations that have to take place. Buyer, seller, and the agents get involved. And so, that's important to highlight because a lot of buyers, like I said, they're afraid. I don't want to overpay for this house, but as long as that appraisal's there, then, you're kind of protected.
Yeah. And as you mentioned, VA and FHA actually has a mandatory clause. So if the appraisal comes in lower than the purchase price, then you don't have to forfeit your EMD, your earnest money deposit. You're essentially saved because the VA and FHA guidelines want to protect you, the first time home buyer, from, purchasing more, purchasing it at a value that it's not really valued at.
Right, getting upside down, for sure, for sure. Yeah, it's there to protect you. And like you said, especially first-time home buyers, the VA and the FHA. As you get into conventional and start doing, adjustable rate, or, you're supposed to be an experienced type of buyer or investor.
5-10% down.
Right. So they're not so worried. But, they don't want you to be upside down early on. So that makes sense. So what is that process? I know we explained a lot, a lot of paperwork going back and forth, but from escrow, from start to finish, typically, in a typical market, what is a beginning to end? How many days does that take?
So we specialize in 21-day escrows. I've noticed a lot of deals come in and they're, around the 30-day range. I don't know if it's just like how it is right now, the market. I noticed a lot of 21-day escrows towards the end of last year, but now a lot of people are going towards like new construction. So some of those can, be drawn out to 45, 60 days sometimes. So I would say the average right now is about 30 days.
Okay, so 30 days. So going into escrow, 30 days later, hopefully things go smooth. I've done, everything I need to do in the escrow process. So I'm getting my keys now. And am I expected to pay my mortgage when I get my keys? Like, when is my mortgage going to be due?
No, you actually don't. It's a few months out, depending on when you close in the month. So it can be 2 months, it could be 1 month, just depending on where you land in the month.
Okay.
But yeah.
Yeah. I was just kind of highlighting that because I know even for, majority of the deals that we do, if they're closing like around mid-month, they're like, oh, I got to come up with, still paying my rent and paying the house on the first, 2 weeks, now I got to pay for both. So, having that understanding that, you typically will have, like, especially if it does close in the middle of the month, it won't be that first, but it'll be the following first. So hopefully you won't have rent at that time. And you're out of a rent situation. But is there anything like in that process where you see, that is really just a struggle? Like, I know that there's a lot of things to overcome as a first-time home buyer, but are there any things that like you just see buyers fall out or do they tend to stick it out?
Yeah, I think especially in this market, a lot of first-time home buyers specifically are just like kind of discouraged and get worn out. And, home buyers, they like to fall in love with properties. And,
right.
They're like, oh, I saw this one house and I'm done. Like, I just want to place one offer.
Right.
But it's more like, okay, we need to go home shopping a few times, see a few different houses and put a few different offers down.
Right.
So that's what I've seen the most is, competing with multiple offers and, finding one that you truly love and, getting your offer accepted. But it does happen.
Oh, yeah.
It does happen.
That's why, I deal with a lot of clients, especially first-time home buyers, and it's like, okay, this wasn't the house for you. It's okay. We're going to keep going, and I have this mindset. And again, it goes back to that, playing sports, that competition, like, we're going to find your house. You're going to win. You are going to win if you keep going, as long as you don't quit.
And, when buyers have seasoned realtors that, know how to negotiate and know how to create contracts that puts them in a position that kind of like is advantageous to the buyer, where it's not putting the buyer in a spot where they don't need to be, but it's using their money wisely. Okay, where can we put an EMD? Can we put, this amount down and it'll be comfortable? It'll basically cover closing costs. So,
just different ways to strengthen the offers.
Exactly.
For sure, yeah. It's not always just the purchase price.
Exactly.
Sometimes it's terms, it's giving some time for the seller to move out.
Even 21 days escrow, those are really strong, things, especially if buyers want to get out of their property quick.
Right.
If the loan's contingent on them selling their home so they can get into, another home, that's important too.
For sure.
So.
No, I appreciate that. I mean, that definitely will help first-time home buyers kind of get a better understanding of, what to expect. I think a lot of it is, you are a consultant. You have to kind of coach them through. So that's good. And then, is there anything that, as a first-time home buyer, if somebody's out there and they're renting right now, any advice that you have for them as far as, just kind of pulling the trigger, just whatever the case may be?
Yeah, I would say a lot of first-time home buyers and just home buyers in general think they have a purchase price, like a max purchase price in mind, and they'll qualify for way more than they think. Like they'll fill in an application and put like $450 and they'll be good at like $800,000.
Wow.
But it's like, preconceived notions when they first go into the application and they're like, oh, I don't know. Like, I don't think I can. Yeah. They're like, I don't think I can qualify for anything when, they can qualify for a lot. And, I would say, take the leap. it doesn't hurt to try for one, because, you know, we're not going to say, okay, you can't buy ever. Like,
well, sorry.
Yeah. And you want to be educated.
Right.
Financial literacy is everything. And if you can get the resources early while you can, like I'm telling my sister this already from the beginning, like, hey, you need to work on some certain things. And, you know, this is the path that I think you need to take. And ensuring that, you know, if you are renting, buy a house before you buy a new car.
There you go. House before the car, please.
A house before the car. Buy an asset that can potentially make you money in the end, versus, you know, something that's going to limit how much you can make, especially if your payments, you know, $1,200 for that new Mercedes you want.
Now you're not buying a house anytime soon. Not here in California.
Yeah. And you can buy your Mercedes after you buy your house.
Right. Exactly. No, that's vital information. I appreciate you coming on.
Yeah,
I know it's been a while. We're trying to get this together, but thank you so much for coming on, sharing your knowledge and experience. Hopefully we get you on another time. Hopefully if some questions come in, we can just have you back. So
sounds good. Thanks for having me.
Absolutely. Well, always, you know that you can take that first step, you know, as Bree said, you know, take that leap. You can visit our website at homeownerprep.com/ebook. You can download our free ebook, which is called Stop Paying Rent. And that is a free download for you to kind of get the ball rolling and let you know exactly what to expect from the real estate side of things as well. So, you know, I hope you got some value from today's episode. Be sure to share with everybody you know, and look forward to giving some more vital information on the next episode. Thank you. I hope you got some value from today's episode. If you know someone who could benefit from hearing this show, be sure to share it with them. And if you're listening to the podcast, we'd love for you to drop us a review. We'd also love to hear from you if you have any questions. So reach out to us on Instagram at Homeowner Prep. Who knows? We may read your review and answer your question on one of our future shows.